All right. Hey, good morning. Good morning. Today is what? What is it? It's a Thursday. Thursday. I know it's ADP day. Thursday, September 6th, 2018. This is your daily Forex trading strategy session brought to you by Forex.Today. Hang on, I'm just bringing up the chat so I can see it live on YouTube. There we go. Please ask questions, get involved. Cool. So I got you over there. You got there over there. That's great. Let's do some Forex trading. With that note, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. 5 Nespressos. Boy, class was long yesterday. Oh, I did like 7 hours, 8 hours of work. Oh, my God. Anyways, the fun stuff is Forex, right? Yeah. So anyways, what do we got going on today? Well, we got some ADP, another dumb report. What is that typically? 8:15. I think we got weekly jobless claims because it's Thursday at 8:30, 8:45. I think there's some, what is it, import-export data. 10 o'clock would be ISM services. 11 o'clock would be EIA report. Tomorrow, non-farm payrolls over at FX Street, 149th month in a row. And, and swing traders, we need to get together today. So we have to figure that out last second. Sorry, I apologize. So lots going on. It's a good trading day. Then we got tomorrow, and then all next week. And I think when you batch all that news together, especially on a holiday week, next week's going to be some kick butt trading, I think. Already looking forward to next week. Remember, I'm doing Monday's daily webinar from Napa Valley at 4:30 in the morning. Yeah, I know, right? Yeah, well, I love you. So why don't we just start here, do some crude oil, do some gold, do some dollar pairs, do some yen pairs, maybe catch ADP, another dumb prediction. Answer a couple of questions if you got them, and all that kind of stuff. Oh, yes, thank you for reminding me. If you're watching it on YouTube, or let's say you're watching a recording of this. This is live, but let's say you're watching a recording, you're like, hey man, how do I get to these live events? You need to subscribe. And what YouTube is supposed to do when you click the little bell thing is bring you directly to the webinar when I launch these live, so you can participate in the chat and all that kind of stuff. So make sure you do that. And also, just please leave a comment or leave a like if you're watching it live. Okay? Now, why do we do these webinars? I want you to succeed. People at Traders Way want you to succeed. I've been trading currencies a very, very, very long time now. It's amazing how quickly time creeps by. But I've been doing this a decade and a half. That's a long time. I made a teenager about the same time I went into Forex. So that's pretty amazing, right? So anyways, I'm here to share everything I learned technically, fundamentally, but, I've been through the psychological struggles that are indicative of being a currency trader. So it's really tough. I get it. So anyways, I'm here to share everything I possibly can with the goal of helping you become a success a lot more quickly with a lot less pain maybe that most people have to go through. Okay? And then why would we do that? It's our hope that we can build, earn your respect. And maybe when you are ready to trade real money, and you say, you know what, I need to pump some money into a trading account, you say, you know what, maybe it's because of all those webinars that Wayne's done. Maybe it's the world-class customer service. Maybe it's the fast execution speed. Maybe it's the competitive fees. But you say, you know what, I'm going to give Traders Way a shot. I want them to be my broker. Cool. Okay, so there's the plan. That's how we're changing the world, making you a success. Cool. As far as WTI, we already have a plan going on. Let's back out. Yeah, John Lespine. You know, the funny thing about that, and I don't want to get too sidetracked, but it seems like it's necessary. Somehow our psyche is such that somehow we still need the painful process to learn. And that's just that. This is a tough gig, and half the time, if not most of the time, we make it tough. Right? Right? I mean, I'm not getting any younger, am I? Look at this. Woo. Woo. I'll move this down a little bit. Woo. You know, I've earned these gray hairs. You know, when I started trading currencies, man, I didn't have gray hair. Didn't have gray hair. Somehow it all happens. But again, I don't want to get sidetracked, but I'll tell you, I love the financial markets. I love them. I love technical analysis. I'm still fascinated by what we do and how accurate we can be. I love the fundamental side. I like being a trader. I like chasing down news. I like discussing other countries and other economies and trying to anticipate the future, you know, and then try to figure out why I was wrong, or just bask in the sunshine when I'm right. And I even like discussing it with my wife and children. This is cool stuff. My friends like to talk Forex with me. They don't trade anything. They just like the idea of it. My professors at university, they're like, you're a currency trader? Oh, well, if you have the time, I'd love to talk to you after class. I'm like, do I get to keep my clothes on? Will I get an A? Then, okay, we'll talk after class. And sure enough, they want to talk Forex. They're like, cool, how do you do it, man? What do you do? What's going on in Turkey? What's going on? Someone tried to sell me some Iraqi dinar. Is that a good idea? Oy vey. Anyways, I love this stuff, and it's cool. So, WTI, here we are. We hit a pretty obvious target, which we've already identified going back in the day. Right? Use your bionic eyes. You move from left to right. It's also the predicted top for the week. Okay? So it's a pretty reasonable place for a pullback. Then we got the lower low. Shields up, red alert. Right? So now what? If you're a bear, and we did this yesterday, so not a lot's changed, but think of it this way. I mean, it's a 4-hour chart, right? A bear needs to do a couple of things, plan A, plan B. First of all, do you have permission to be a bear? Well, you kicked off obvious resistance, both price resistance and market resistance. Booyah. So you got permission. Then you got the lower low after breaking through some support. Okay? Also, the breach of the 2155, which I suggested yesterday, indicates a retracement back to a 200 EMA. Let's go back into here. So now what? Well, first of all, it doesn't have to keep falling, but that's your bias. That's you have to set the trade plan up. Remember, all trade plans are hypotheses that need to be confirmed. But in this case, you would say, well, these market conditions seem pretty bearish, right? So I'm going to let it retrace back to 69.32, and then I'm going to dump it. Okay? That's plan A. Plan B is the same plan we had yesterday. Have it go up to 71 and then dump it there. So you're basically saying 69.50-ish, if you want round numbers, or 71-ish. If you're a bear, that's where you're going to dump it. Right? Lower low, look left, drag it right, sell. Okay? And, you know, really there's a plan C here, if you've noticed. This was also identified yesterday. To me, I would try to fold these two in. I'd make them the same plan. So if you could sell here and have your stop there, you get both for the same price. Remember, a dollar, one contract of oil means if oil falls $1, you get paid $1,000. Right? John says, hey, September to December, terrible for WTI. Well, the thing is, we're through the summer driving season, right? So the next real demand will be the winter. Also, you have to think of this. Don't think of it too literal. Like they'll say the summer driving season, but that doesn't mean summer. Okay? Don't think of people driving their cars, filling their gas tanks up with gas, and then say that is what is moving WTI. What's moving WTI is that there are refiners that buy raw crude oil from somewhere, fracked in the US, pulled out of the north, out of Canada, pulled out of the sea in the North Sea, right? Saudi Arabia, Venezuela, right? Somehow it gets to a refiner. A refiner buys the raw material, the gunk out of the ground. That's what drives the value for WTI, not the demand for plastic or jet fuel or lipstick or gasoline, right? Or tar. It's the refiners that say, oh, we have low inventories of some sort of product that we sell to the market. Hey, we're low on jet fuel. We need to make some more jet fuel. Oh, we'll buy some more WTI. Okay? That's the interesting thing. So you have to think of it from that point of view, and you'll start to understand the ebb and flow here. Demand will pick up when refiners start to think about building up inventories of heating oil. Okay? How about this, John? A change in price based on hurricanes. Okay? We have a hurricane in the Gulf of Mexico. If that seems to shut things down, supply is threatened. Just the threat of supply can drive up prices. Okay? That's an exogenous shock. Drink! See, I invented a drinking game. Every college has a drinking game. Every time my economics professor says exogenous shock, you do a shot of tequila. And that's your exogenous shock. Tequila! Don't say it again. So anyways, yeah, an exogenous supply shock, such as a hurricane, could also affect price. But really what we want to consider more often than not is demand side. Okay? All right. All right. So that's that. Hope that makes sense. Brent. Okay. Now, let's just repeat just to make sure we have cohesion here. We identified these tops before they topped out. That's why I even made this profile. Remember that? I said, hey, look, WTI is hitting $80 a barrel. Remember that? And then I brought it up, and it's also again, I drew resistance here, so you can just barely see that that it's also the predicted top for the week. I'm like, the predicted top for the week and psychological level of 80, oy vey, that's probably going to be resistance, right? And then I switched over to WTI, and I'm like, look, WTI is also at the weekly projected high, and it's a Tuesday. We should probably counter-trend this, right? Predictable. The funniest part of this is one would expect nat gas to go up, but maybe I don't want to trade nat gas anymore. Johnny did natty. Johnny natty. Highlander. Yeah. What about an earthquake in Japan? That is an exogenous shock. Was it on the calendar? If it's not on the calendar, it's exogenous. John says hurricanes would be a shorter term impact. Absolutely. Now, here's the cool thing. Okay? Remember, people is stupid. So when the hurricane is broadcast on CNN, and there's someone standing on the beach, this is the worst hurricane ever to hit the world, and it's going to be horrible, it's going to destroy everything. They're like, oh my God, it's the worst hurricane ever, because I thought the last hurricane was the worst hurricane ever. Right? Well, when you get to that point, when they're drumming it up, that's when idiots in New York or wherever, they say, oh my God, that's the worst hurricane ever. So all of a sudden they drive up prices, right? Well, did you know it actually takes a long time for a hurricane to float off Africa, cross the entire Atlantic, right? And then head toward the Caribbean, and then turn up toward land? That actually takes a while, right? And you can watch it happen before it gets on CNN and the Weather Channel and whatever it is, right? So I don't have the image in front of me, but there's an image of me, I don't know, at least 10 years ago, sitting with this rig behind me. And I have, just happens, I'm in some webinar, so it was a screenshot type thing. But I just happen to have I was on one of my screens, I was tracking hurricanes. And it's great because it's like 10 years ago. So, I'd watch, you just go to the NOAA website, by the way. And they track it for you. You can get satellite imagery, and you can put them on loops, and you can track predicted speed and predicted paths and rainfall, and it's beautiful stuff. So when you see something brewing, you could say, well, if I can buy crude oil at support and get myself into a situation of, I have my stop at break even, so I'm hero or zero, and this hurricane develops into a story, I'm going to make money on it. And then look, if you want to take all that money you made and donate it to charity to help those affected by the hurricane, that's up to you. But let me tell you, poverty doesn't solve a lot of problems. So if you can see the hurricane coming, you almost have a moral duty to make money. Because then if you made money, then at least you have the opportunity to do something if you want to. NOAA, it's National Oceanic and Aeronautical Administration. National, yeah. There you go. NOAA. Yeah. Is that right, Ross? Yeah. No. The hurricanes generally don't. The only, remember Superstorm Sandy? That was one. All right. So blah, 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 blah. There we go. Crude oil. Spent too much time on that. I apologize. I'm cruising, I'm bruising, I'm never, never losing. Oh! Starting to come down. Right? That's crude oil again, how we planned it out in the past. Remember, we had the up, and now here's the predicted down. Yeah, you're welcome. Okay. All right. Here's a big consolidation, huh? More of the same? Every day it seems we're wasting away. Hey, thanks for the thumbs up stuff. I appreciate that. All right. Support. Stuck in there. Well, wait it out. Is it giving you any sort of like flag pattern or wedge pattern or no? Seems very just sideways. But I'm okay with that because remember, 79.73 was my line in the sand. We have to keep it above 79.73. Well, it's been there all week. So it's important to a lot of people, right? So bears need to sell way up here. Bulls, this is your buy zone. That's what this orange thing is, right? And your stop would be just below this. And you just hope it goes up. I mean, this is 80, right? So if you could be in this at 79.80 to 79.90, that's what our line in the sand is, and you just hope it doesn't drop. See, if it drops below 80, it's going to go to 50, and that's part of my 80-20 type rules. So so that's why you just set it and forget it and say, look, it has to go up here. If it doesn't go up here, it's very, very bearish, and you don't want anything to do with it. Okay? So it can't be any more bearish, which means maybe it becomes bullish, and that's what this is. Either way, we have this as a bear would sell here or a bear would sell here. We just don't know if bulls are going to buy it back, right? But if you're a bull, you would hope for that, and so that's what this is, right? We're stuck in the range, so you're hoping for bulls want a breakout, pull back, long and gone. Bears want to sell it high and bring it all the way back, and they're going to not play this as resistance. They're going to play this as resistance, although this is starting to look a lot like resistance, right? So anyways, plan it out or stay away. Kitty cat, pink area means it's the projected top of the week, and we seem to be consolidating there. Why? Isn't that what's projected? What we had here was the potential for a breakout, pullback, breakout. We haven't even gotten that. Pretty amazing, right? That some of these pairs have consolidated so tightly, like the Aussie yen, but here, this is USD CAD. Not only are they consolidating tightly, they're consolidating at the range you would expect the consolidation. And it's understandable being a short week with non-farm payrolls on Friday. We talked about this, like maybe it'll consolidate, and then NFP will bust it out, and next week we'll have breakout trades. Right? Coolio. Look at this. Didn't quite get the pullback we predicted here. It's still looking pretty. Euro dollar. Okay. This is interesting. Is anyone here a bull? If you're a bull, you should be right in here. That should be your buy zone if you're a bull. So let me clarify that just to make sure everyone's on the clue train. How should I draw this? Hang on. I think we'll do it. You know what? Let me just go. All right. Here, give me some time here. All right. This looks like a zigzag tool. I probably could have just used a zigzag tool. All right. Hit obvious support. I'm going to count this as a double bottom, which we talked about at the time that I would count it as a double bottom. Okay. Count that as a higher high, higher than this area, which then sets up the 1, 2, 3. And this is what should be next if you're a bull. That's what a bull's going to think. Now, we have ADP coming out. Right, we have ADP coming out in a few minutes, 11.5 minutes. So that could really, I mean, the volatility could mess that up, but that's sort of what the price action is suggesting. Okay. Okay. All right. Do you see that? Right. I'll remind you that on Tuesday, we had this also as a counter trend. Do you remember talking about that? The target for the counter trend is 116.40, which we have hit. That was the other thing, right? And then this circle, to bring that back into perspective, was the target from way back into here. So we had all of this and then down. And so now the question is, are we on our way back to this resistance? It wouldn't be this week, but maybe next week. We don't have this pivot quite yet. But this bottom, I think we talked about this, right? This bottom for bulls predicts 119.75. Can we just say 120? This bottom here predicts a move here. Okay. Simple swing trade. Okay. So a bull is going to think that. Is that plausible, do you think? Could we possibly be on our way to 120? Maybe it's between now and the end of the year. Maybe it's in October, not September. But at some point, you have to make the decision, is this bullish or bearish, right? Right? Here's Pig Dog. Let's go to the 4 hour. Who drew this? Amazing. Who drew this? Amazing. Check that out. Clearly support, huh? Do you think that pivot had anything to do with it? Of course. Yeah, EIA is not until 11, though. Someone said in the chat about the EIA. Okay. So if you're a bull after, so let's go through it again. This is a touch of weekly support on Wednesday. In that scenario, not today, only yesterday or earlier, you have permission to counter trend trade if you're a bull. Because what it's telling you is all bears are supposed to get out. And I think that's what all this was. I don't actually remember. But you can see I have it highlighted. I have a horizontal line. Then I have another horizontal line on top of the predicted bottom for the week. So I must have been telling you, like, hey, that's where bears are supposed to get out. So a bull is going to hang around here. Psst, hey, would you like to buy some pound? Psst, hey, buddy. Right? Lurking in the shadows. There's a bull. Well, got some action there. Right? Would you like to buy some pound? It'll only cost you a nickel. A nickel! Shh! A nickel. So buy a pound and take it home tonight. Yeah. So, whoa. So that's what a bull is thinking here. Right? 50% predicts a 1382, which is a monthly sell zone on resistance. So it doesn't mean this is bullish. It just means bulls are going to have a run on this. And maybe, just maybe, bears are going to take another shot here like they did before. Right, Luis? Oh, man, I want to travel and see you guys all around the world. I have this huge desire to travel, man. I need to get out. I need to see you guys. I was thinking, like, we should meet up. Like, I miss Hong Kong and Singapore with Daniel, right? And then I miss South Africa with Ryan. And then all of a sudden I'm like, I like me in Europe. Then I'm like, I like me in the Caribbean. You're like, but I haven't been to like Dominican Republic and stuff. And I don't want to hang on the beach. I want to, I don't know. All of a sudden I'm like, I want to go everywhere. I miss you guys. And then I'm like, what about all the places I haven't been? Oh, man. I would love to go to Portugal. But here's the problem. I'm like, I don't have time. And I know you hear me say it, but I'm like, even I struggle. I'm like, oh my God, I don't have time at all. I'm not joking. I must have done 8 hours. I was in class from 6:30 to 10:30 last night. I'm like, what? Yeah, Amsterdam is another place. See, I'd love to hang out in Amsterdam, and like, what an amazing country. This idea of entrepreneurialism, it's the closest thing to libertarianism that I can think of. Hey, Len, yeah. Hey, yeah. So anyways, lots going on anyways. I'm just saying, I would love to hang with you guys. I miss Japan. Like I was thinking, I renewed the kids' passports. And I'm thinking of all the places. I'm like, I got to take my kids to Japan. Like, I have to take my kids to Paris. And then I'm like, I have to take my kids to Beijing, man. And all of a sudden, I'm like, where do you want to take your kids? And, well, yeah, well, I'm actually Australian. I travel on my Australian passport. But yeah, Brizzy, I want to head way down south. So I'd like to, well, first of all, I'd have to do, I guess I'd start way up in the Northern Territory, man. And I'd work my way all the way around. Because there's just people and places I need to see. Pakistan would be very interesting. My goodness. Yeah, I like Michigan. Pakistan would be crazy interesting, wouldn't it? Oh, by the way, homosexual sex is now legal in India. If you were just, like traveling through Delhi and you're like, how come I can't have homosexual sex? Well, no, you can't. Just, I don't know, it came up on the news today. I'm like, oh, right on. There you go. Just if you were... yeah. Just if you need it. Just if you're thinking about traveling, there you go. There you go. Right? Things to do in India. Visit Taj Mahal. Check. Visit a chat house. Check. Yeah, anyways. Gold. Boom, 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 boom. Boom, 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 boom. So let's zoom in. Because remember, these orange lines I draw ahead of time, right? You guys remember this one? Here's the projected bottom. This is the gray zone. This is the zone inside the gray zone. And I'm like, well, maybe we'll get a double bottom, higher high, higher low, higher high. But isn't this... Well, it reminds me of a conversation I just had with somebody about a fellow trader. And the conversation was this. Is it more difficult to come up with the strategy? Or is it more difficult to come up with the tactics? And I'm from the point of view where deciding to buy, I think, is much more difficult. And once you've decided to buy, the tactics should be easy. Now, he didn't quite agree, but it's okay. But I'm like, oh, all right, I want US dollar to weaken. So that means gold should go up. I want gold to go up. Now, the funny thing is, the last, 5 years, if you've been trading with me, I'm a bear on gold. Well, now I want it to go up. Not necessarily that I want to buy it, but I want dollar to weaken, and gold is the anti-dollar and all that kind of stuff. I'm like, fine. I don't expect it to weaken quickly because under these market conditions, there's a lot of reasons why the dollar should be strong. But I'm trading through the trough. Remember, there's all kinds of cycles that we need to go through. Weekly cycles, monthly cycles, quarterly cycles, seasonal cycles. Then there's business cycles and all these different things, right? By the way, what's the time? Oh, I missed it. Did ADP just come out? $1.90. Okay. So anyways, wow, look at gold freak out, right? Anyways, $1.90 on ADP. Whatever. All right. So my argument here is I look at the charts last week. And I say, well, down here is where I would buy. Monday's a holiday, so Tuesday we get together, and it's already blown through the doors on this. Someone has already made the decision to sell. But, it's pretty bearish, right? Lower low, lower high, lower low, lower high, lower low, lower high. Like, you could have decided on Monday or last Friday to sell. That makes sense to me. But on Tuesday, we get back, and it's already sold off, but it's in a buy zone now. Clearly, we're at the weekly target on a Tuesday, which by definition sets up a counter trend trade. But you're in a monthly buy zone with a weekly counter trend trade. So like, okay, so putting all that together, you could say, I would like to buy this. That's called strategy. Doesn't mean you bought it. It just means like, that makes me want to be bullish. I certainly can't be bearish. Like, what kind of fool sells at the support line, both monthly and weekly, right? Monthly support's here, right? You can see it, I hope. Monthly support is here, right? Weekly support is here. You're like, it's virtually the same thing. I'm like, I know, right? Like, what kind of idiot would sell it? So now what? You say, well, my strategy would be if I can get some sort of technical pattern, technical confirmation, I could buy it here. And to me, that's the easy part. And the other trader was arguing, well, the technical analysis is difficult. I'm like, really? You can use anything you want. I mean, moving average crossovers, oscillator crossovers, price action, candlestick patterns. Look, dude, if you're at support and you want to buy, I'm sure you could talk yourself into buying some nonsense, and it doesn't even matter what your reasoning is, because if your support holds, it's going to go up or sideways. If your support's correct, it ain't going to go down. Well, that's the whole point. So, like, why would it even matter? So I could do something like insert indicator. Let's, yeah, okay. I don't know what this is. Relative vigor index. That sounds great. Boom. Let's add some colors. I like them a little fat. Oh, let's make them a little fatter. Let's make them a little fat. Fatten them up like American turkeys. Boom. There you go. So I'm going to use that to make a decision now. I don't even know what the heck it is. Great. RVI. Okay. RVI is way down here at support. Turns the direction. Okay. Right? Whatever. Doesn't matter to me. Now, how am I going to delete this stupid thing? Okay. But you use whatever you need. But to me, really, at that point, should be easy, not difficult. Because if your strategy is correct, you can just get lucky. You can buy for the dumbest reason I've ever heard. It doesn't matter if it's going to go up with or without you, right? Then your reasoning could be like mentally deranged, but it's going to go up anyway, so you buy it, right? So a 5/8 cross, a moving average cross, a stochastic cross, a MACD. See, look, there's a MACD cross. Well, I don't have MACD on the chart, but I can tell you that's the MACD cross. Actually, this is the MACD crossing up. This is the MACD crossing over the water line. Should I add that for you? Let's do a MACD. Making a MACD make you want to jump. Is this the right one? No. Yeah, the colors just suck. So like I said, here's the MACD cross. There's the crossover. So you're like, oh, well, the MACD told me. All right, good, whatever. MACD didn't tell you jack. The most important thing here is your reasoning of double level support, of weekly and monthly support. You're like, well, if it goes up here, I'm going to buy it. So you make some sort of technical reason. You're like, oh, look at the handyman doji. Oh, buy it. Or the higher high, higher low. So you should buy it here, right? Or the higher high, higher low there. Or you look for a double bottom or whatever. And off you go to the races. Congratulations, you bought it at weekly and monthly support and it went up. Chuck says monthly support's a little bit lower. Well, yeah, what are you talking, like pennies here? Right? It's $1,200 an ounce and you're talking pennies? Yeah, okay, good. That's why I thought maybe you'd come down a little bit here, right? Unless, Chuck, you're talking monthly S1. That's not what I'm talking about. I don't trade SNR1. Okay. So when I'm talking monthly support, I'm not talking monthly support 1. I'm talking buy zone. I'm talking swing trading. Okay. So if I was bullish and I wanted gold to go up, okay, that's it. That's all I know. For some reason, I'm bullish, and I want this to go up. This is the right. I would buy it between 1194 and 1188. I knew that a week and a half ago. So it falls down in here. It's oversold on a weekly basis, so I would buy it. I'm like, it can't fall any further on a weekly basis, or shouldn't, I should say. And I'm right in my sweet spot for the monthly, so I'd buy it. I'm done for the whole month. Done. Yeah, I have my monthly at 1188, so it's not that, I mean, it's not far. I mean, it's close enough. Good enough for the girls I go with, Chuck. Okay? So that's it. Like, that's, okay? So that would be it for the month. I just moved my stop to break even now, and I'm done for the month of September. I bought gold right in my cluster and done. How you pull the trigger, to me, that's easy. You can do it for the wrong reason and still make money. Knowing it's going to go up, I think is the better part of the process, right? Oh, yeah, got 1180. All right. To each his own. All right. Da, 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 da. La, 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 yin, yin, yin. All right, I guess we got to go beast. Huh. So it went up, but it didn't fall as far as I wanted it to. Okay. So what can I learn from this? How do I catch this if it took off without me? Is it possible? By the way, again, let me ask, if only half of you have reached forward and clicked the little thumbs up button. I mean, it's less than a half a second. Would you please? It'd be great if that was triple digits, not double digits. That'd be really cool. Especially, I was thinking we should do a special event, where we do like a 12-hour session together live on YouTube. I think that'd be cool. So anyways, how do you catch this? 4 hour, 21. Yeah. I would favor in this scenario price action. Okay? Because really the moving averages are dynamic levels of support and resistance, but they're lagging. So the trick with the 4 hour 21 in most situations is you won't actually touch it, but then you'll come back the next day and you'll see that price is now touching, the moving average is now touching the price, but because it's lagging, they don't actually touch in real time. So anyways, there's price action is another one. Higher high, look left, drag it across, that's your new buy zone. Right? Works the same way anything else. So like even if I move to a smaller time frame, like a 15-minute chart here, you just use your mind's eye on this one, right? Lower low, look left, drag it across, that's your new sell, which it worked, right? So then it makes a new lower low, right? Look left, drag it across, that's your new sell zone, which it worked, right? New lower low, look at the old support, drag it across. That's your new sell zone. That worked. Okay, it worked twice down here, right? So now you're here. Look left, drag it across. Here's your new sell zone. Okay, you could have sold this. That would have worked just as well. Okay, so on and so forth, over and over and over and over and over again, until you bottom out, right? Break out, higher high, look left, drag it across, and all that kind of stuff. Another thing you could do is after the double bottom, higher high, you could fib it. And when you use Fibonacci, right, you want to buy a retracement back between the 382 and 618. So that's a whole sell zone as well. Retracement to the 21, sure. Once again, another opportunity you can consider by all means. Okay. So that's your beast, otherwise known as the Widowmaker. Cat ain't having it. Still at support though. You notice that? Remember, any lower than that, I don't even want to think about it until way down here. But to a bear, that means your monthly target is way down at 82. That would be very bad for CAD. I would be very concerned it meant strong yen. Strong yen would be counter to what I would like to see in the market based on macroeconomics. So I really hope it doesn't fall any further. It complicates my life. So I don't know. Maybe a bank will buy it there. I don't know. I need this to go up. Kiwi. Okay. So it's Thursday now. Do you remember on Tuesday we went through all these charts and all I could find were counter trend trades? Remember I said how I really dislike it, but it's kind of just where I'm at. But notice a lot of them have reversed. They're counter trend trades, right? In the sense that this dropped like a ton of bricks, but I want this to go up. And I hate buying things that are falling like that. And you say, well, Wayne, you always tell me to buy low. Yeah, buy low in an uptrend. I've never once said, yeah, you know what? You should buy low in a downtrend. A lot of people mess that up. So you should open your charts, and the first thing you ask yourself are, what are the market conditions? Are they bullish? Are they bearish? Is it actively moving, or is it slow? Is it consolidating? Right? Because you need to know, is this a good opportunity for me to trade? Well, if you're a bull and the market's falling, you should be cautious and say, well, there might be some bullish opportunities. I need to be very precise on my prices, but I need to be conservative on my entries. But if you open your charts and you're a bull and the market's moving and it's on fire, get in, get in, get in! Go, 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 go! Right? Raymond says, I've been using the price action after doing the price action course on FX Bootcamp. Works great. Yeah. Right? There's two things in the world I need to trade. I need pivot points and I need price action. I don't give two hoots about anything else. Both price action and pivot points are predictive. Right? Pivot points, they don't lag. They're leading. So I love having leading indicators. The other stuff are pretty colors to help me make decisions. They help me analyze. Here's the problem. A lot of new traders, they come to the market, they want to get rich quick. They listen to some guru that hypes them up on trading. Trade, 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 go, 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 buy, 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 sell, 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 go, 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 yellow Lambo, look at me. And it's not how it works. You know, and if you get caught on like buying 5A crosses or buying MACD crosses or buying Stokes crosses or those are all lagging indicators, which are tools used for analysis. But they don't tell you what to do. They tell you, like, what are the market conditions? Is the market moving quickly? Is the market technically bullish or is it technically bearish? But like by the time this 2155 crossed, you would have bought it here. Well, that's stupid. You bought it way up there. And then, of course, an amateur trader is going to be way over leveraged, so it's going to come back down like this and knock them out for a loss. And then you can say, well, Wayne, you should just teach someone to buy at the 21, which, well, I do, but here's the problem. It wasn't touching the 21 at that time. The 21 would have been way back here. So moving averages and all that kind of stuff and oscillators, they're great, very useful tools to analyze, but they're never going to put you into a trade properly. You're always going to be late because they're lagging. So they're good analysis tools, and they're great. Like if you're trying to sell somebody something, then that's great. You're like, oh, you should have just sold here and bought it here and sold that and bought that. And great. But the most useful tools beyond the analysis now, the pull the trigger type stuff, are the leading indicators, and that's pivot points. So like for example, next week, I can already start pricing out where I'd like to buy. And I can also price out for next week where I'd like to sell. They're leading indicators. I can do things like with price action, like I just showed you over and over and over again. So you have a scenario like this. Okay. And I'll tighten it up a little bit. Do you trade that? Nah. But what if it does this now? I say, oh, I'm going to use price action as a leading indicator to discern where I'd like to sell it. I can't sell it now. I made a new lower low. So I look left. I grab this. I drive it across. Right? Remember, it's a 5-minute chart, which means, let's say it's a 5-minute chart. Even on a 5-minute chart, that means like probably 20 minutes later, it comes back and I sell there. That's where I sell. But I knew that 20 minutes ago. I've been sitting around waiting. It might have been half an hour. I might be sitting around waiting. Then it comes back here and I'm like, sell, boom, and off I go. Okay? That's a leading indicator, price action. I knew in the future where I'd like to buy or sell in this case. Or a pivot point where I'm like, I knew this here, here, and here, and even really kind of up here, which is part of front running on the swing trading group. This is a buy price. That's a buy price. I knew that. It's like there's no argument over that. That is the monthly buy price, and that's that. And I knew it before we got there. So I either buy that or I'm not a buyer. That's what I like about trading. If you're not a buyer, then you wouldn't buy that. If you're a buyer, by definition, that's the price you want. Not a little bit lower, not a little bit higher. And we knew that before it happened. Now the question is, if you don't know that, then you're missing something. And we need to fix that. You need to be educated. But a professional trader sits around telling their clients like, yeah, we're a buyer of Kiwi down here at 72.80, right? We're going to buy it at 73. We're a buyer of Kiwi yen at 73. Really, it's 72.80, right? But whatever. But that's what people are thinking. Okay? And having a leading indicator is so helpful. And of course, then you're like, well, if that doesn't go up, we're going to be very cautious buyers. It's not really what we want. But we might try again down here at 72.50 because we see some support. Okay? No, Joe, we need to meet today, I think. My life. So I think we need to meet like right after this webinar. Okay, I apologize for that. Tomorrow I got non-farm payrolls, and then I have to jump on an airplane. I'm flying across the country, and blah. And I know I just complained I don't travel, but is Napa Valley really traveling? Yeah, I can't do an NFP one, and so I think we should take a small break, and then maybe soon, like in a half an hour or something. We should do the other one. Leading indicators, guys. And by the way, I did not poo-poo on lagging indicators. They're very helpful tools. So what have I taught for 15 years? Like 15 years ago, I would have said, look at the 2155 cross. It tells you whether the market is bullish or bearish. That is true. I didn't necessarily say sell a 2155 cross down or buy a 2155 cross up. I just said, technically, that means it's bullish or bearish. Why is that important? Well, you can say, well, now that I've analyzed the market using the 2155 EMAs, I have determined that the market is bearish. Well, congratulations. Why is that relevant? Well, if you're fundamentally bullish, at the very least you can say, well, the market conditions are technically bearish. Maybe I shouldn't trade at all. Or if I do trade, if I do buy, I should probably be cautious. There you go. I do both weekly and monthly. Okay? Well, what if you're a bull, you open up your chart, and the 21 crosses above the 55? You can say, oh, well, technically speaking, the market's now bullish. And I'm fundamentally bullish. So I should be a buyer here, and I should be a little more aggressive getting in. And then I'd say, well, 2155 isn't a trigger. It's just a confirmation. So how do you decide what price to buy? Well, hey, you know what? 5.8 cross is great for that. Pullbacks to the moving averages are decent areas. Why? Well, you can consider that a Fibonacci retracement. So, well, why don't you use Fibonacci too? Or instead, right? But all of that is still, now you simply decided you're a bull in an upward market and you want to buy dips. Well, isn't that what price action is? Whether you call it a retracement to a moving average, well, what if you had no moving averages? Then the retracement back, if you don't have moving averages, is a Fibonacci retracement. Now, do you really care if it's a 382, 50% or 618? Dude, try this. Change your Fibonacci study to show you 33%, 50%, 66%. Will it make a difference? No, it doesn't make a damn difference whatsoever. Why? You just buy pullbacks. Change it again. Make it a 40-60. It'll work just as good. Fibonacci has nothing to do with it. You're just buying pullbacks. Great. Well, what if you don't have a Fibonacci study? You don't know how to use Fibonacci. Great. Use price action. Why? You'll get the same thing. Look, you don't have moving averages. Guess we have to do this. This is better. Okay. Okay, you don't have moving averages. You don't have Fibonacci. So how do you do it? Well, it made a higher high. So you're up here now. Starting to pull back, great. Where do you buy? Well, look left, drag that across. That's called price action, leading indicator. So you're like, well, somewhere around here. Okay, so what if it did this and then went up? Still valid. It's just a pullback, bro. Cool, right? Simplify, simplify, simplify. Sorry for eating, I'm just hungry. All right. ADP, non-event. We have jobless claims. Oh, we already had that too, right? Okay, jobless claims, that's a non-event. We have what's import-export data or something at 9:45. ISM services at 10, that's important. I think it's 11. We have the EIA report for oil. That's important. And then, of course, tomorrow at FXStreet.com, I will see you for Trade Non-Farm Payrolls Live, month 149. And you'll say, Wayne, that's significantly more than 12 years. I'm like, yeah, I know. I've been doing that one monthly webinar for more than 12 years. More than 12 years. Wow. So that's cool, right? So I'll see you tomorrow at FXStreet.com. Thank you to Forex.Today for hosting us. Please, please, please visit TradersWay.com. Open up even a demo account would be great. Make sure that you're subscribed to the Forex.Today channel. Make sure you give it a little thumbs up, please. If you found even a second of today's webinar valuable or helpful or entertaining. And if you're watching a recording, please actually leave a comment, even if it's just, hey, man, awesome. Maybe it's like, hey, hello. Maybe it's thank you. Maybe it's what up. But just something, okay? And maybe something intelligent would be even better. So thank you, guys. I appreciate you. I really do appreciate the loyalty and respect you show me every day. So I wish you the best of luck. So peace on earth. May the pips be with you. May our profits be above average. And if I don't see you at NFP on Friday, then I will see you from Napa Valley on Monday. Yeah, I'd get up at 4 o'clock in the morning for you. Yeah, no vacation for Wayne. All right, cheers.